store.
Good morning. You're watching us here on Chartbusters. What a stellar recovery it has been for the market. We got a dip in the morning after a stellar rally on Tuesday, and now bulls have lashed onto that. A near 200-point recovery for the Nifty and led by the Nifty Bank, which has now moved to the high point of trade after recovering 800 points from the lows. First up, all the top stories that we're tracking on this edition of Chartbusters. It was a lower start for the Indian markets as global equities sold off, but now we're seeing a big recovery from the lows. IT still remains to be the top sectoral loser, but gains have been led by the auto pack, PSU banks as well as midcaps, which have now moved into the green. Zee Entertainment signs a licensing deal with Star for ICC men's cricket events, but CCI's concern over merger with Sony put a dampener on the stock, even as Zee clarifies that they remain in touch with the CCI. Escorts hits a fresh 52-week high after strong sales for the month of August. The company remains bullish, says sales are likely to improve in September further. Bajaj Auto's August sales too beat estimates. The management tells CNBC-TV18 that the sales should again remain strong in the festive season. SpiceJet reports their fourth quarter numbers and a loss of almost 500 crore rupees, and FY22 losses have come in at around 1700 crores as higher fuel prices hit their bottom line. The company also announces that its CFO Sanjeev Taneja has resigned from his post. The stock tanks 6%. The government hikes windfall gains tax on crude to 13,300 rupees a ton versus 13,000 a ton earlier, and as a result of which ONGC is down 2.5%. Well, let's take note of the way the markets have moved, and there's only one chart that denotes the kind of recovery that we've seen, and that is the crisscross lines. When we started, we had nearly 4 stocks in the red for 1 in the green, and now those lines have crisscrossed, and we have the green line much above the red one. We have 2 stocks which are now higher as compared to just 1 which is declining. So the distance between both the green and the red lines is widening as we speak. From the broader markets, we are seeing a big rally in a couple of these names. The mid-cap index up around 0.25%, and at the high point is Pidilite, which is up 2.5%. Cummins is the other one, which is 3% higher, and Page Industries has recovered from the lows. Good time to get in Aditya Agarwala for a quick technical check on the market. Aditya, we got a dip. The bulls took that bait. We've crossed past the 20-day moving average, which was proving to be a bit of a resistance. Where do we go from now? That's the big question, because the second half, we will have the weekly options expiry too.
Good morning, Manglam, and thanks for the show. So clearly, our markets are on a different, I would say, league altogether at the moment. On steroids, global markets are correcting while we are just marching ahead. For the day, maybe because, as you mentioned, it's weekly expiry. 17,730 is something I'll closely watch out for on the spot level. If these levels are taken out anytime during the day, then my sense is we could be in for a good short covering rally again. We've already witnessed a good 170 point short covering rally from the bottoms. But yes, for now, 17,730 is something which bulls should watch out for. If that is taken out, next level would be 17,850 to about 17,900 as well. Clearly, there's a lot of buying activity that we're seeing in the mid-cap space and the small-cap space. Broader markets are buzzing around. And as you mentioned, banks too are doing well for themselves. So Bank Nifty, if it manages to cross 39,750 on the upside, then there's a good case for Bank Nifty to test levels of 41,000 to about 42,000 as well. These levels will take some time to come, but looking at the chart setup of the Bank Nifty, looks like Bank Nifty should continue to outperform from here on. And the PSU space is something which is doing really well, helping the Bank Nifty pull up, and that will likely to continue in the coming trading sessions.
All right, take that point. Individual stocks, what do you have on your list, Aditya?
I've got a couple of buy recommendations, Mangalam. Auto space is something which has been doing phenomenally well. The entire month of August has been phenomenal for the autos. Still looks very attractive. Maruti is something which is just starting to break out from that major downward sloping channel, which was acting as a major hurdle for the stock. Now it has successfully managed to break out in trade today. So on the upside, 9,500 would be the targets. Traders should definitely look at getting into Maruti at these levels. Also look for a stop loss on the downside at 9150 to about 9100. The second stock recommendation is Tata Consumer. Again, this is one stock which entered into a narrow consolidation phase after a big correction, and now it's breaking out of that consolidation phase on very good volumes. So one can go ahead, buy at these levels, look for a target of 870 on the upside with a stop loss at 810 on the downside.
All right, as we speak, we do have a bunch of other stocks which are making the highs of trade as well. GIC from the cash market, currently at the high point. RPG Life as well. RPG Life, in fact, is up 6%, and with volumes which are almost twice of what the company does on a normal day in the last 10 days at least. So RPG Life has surged to the high point, and giving company out there is a bunch of other stocks as well. We just spoke about GIC. That's the one which is moving well. But, at a time like this, it's important to get you some ideas for profit as well. Let's cut across to our colleagues from Money Control Pro. Nitin Agarwal joins in with a stock that he's been tracking. Nitin.
The overall market correction makes some of the highly valued and fundamentally strong companies look attractive. One such example is Endurance Tech. The stock price has fallen by around 27% from its 52-week high. The overall market correction and the severe shortage of semiconductor chips, which led to the production cut by original equipment manufacturer, proved to be double whammy for the company. There are a couple of factors which, however, make the company very attractive for a long term. Endurance generates most of its India business revenue from the two-wheeler segment and has a very strong position on the back of its technological advanced product range. It is therefore best proxy to play the growth in the two-wheeler segment in India. It is important to highlight that the company continues to outperform the industry. In Q1 FY23, the company posted a revenue growth of around 40% from the segment, whereas the industry grew by around 38%. Secondly, we expect Endurance to outperform the industry by acquiring new clients and the new business from the existing client. In Q1 FY23, the company generated a new business of around rupees 400 crores from the Indian companies. This includes EV orders worth 110 crores with a total EV order book of around 480 crores. And it won business worth euros 14.3 million from the Audi, FCA and Maserati in the European business. Such strong order wins gives earning visibility in the near term. Thirdly, the management is focusing on the cost efficiencies, higher value added products and import substitution to improve its margin. Lastly, the company trades at around 24 times FY24 projected earnings, which we believe is very reasonable for a fundamentally strong company like Endurance Tech.
All right, take that point, Nitin. Thanks a lot for that. We take a short break, and on the other side, we get chatting with an important guest. We do have the management of Emami joining us. Stay tuned. They will tell us all about demand and the business performance.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाइड क्लब प्राइम आग से बचाए।
स्टॉप, उठो भाई साहब, हमारे साथ वापस चलना है क्या?
ये 3 पुलिया सुना आपने?
3 पुलिया, अब वापस ही चल लो।
अरे आप इतनी दूर हमारे लिए?
आपकी मेहनत कहां से कहां पहुंच रही है। मैं आपके एक साइन के लिए यहाँ नहीं आ सकता? हो गया आपका अकाउंट ओपन।
हर बंद राह ओपन हो सकती है, लगता है सिर्फ दिल।
धन्यवाद।
एक्सिस बैंक, दिल से ओपन।
But today, where we've seen a strong recovery in the markets, though at high levels we're seeing a wee bit of volatility. Nothing really to worry about. The Nifty bank is, shuttling between green and red as we speak. It's absolutely at the flat line, but that doesn't take away from the fact that there has been an 800-point recovery from the lows on that index. And the Nifty too, while sitting with a cut of almost 100 points, has still recovered over 170 points from the lows itself. So let's see how the day progresses. Currently hovering around that 17,650 mark. Perfect time to get in a big corporate guest that we have lined up for you today. We have Mohan Goenka, who's the Vice Chairman and Whole-Time Director of Emami, to understand where business is headed, given inflationary pressures, how demand is shaping in rural India, and what Emami is doing basically to go ahead and capture the demand growth as well as the Indian consumer story. Thanks a lot, Mr. Goenka. Always a pleasure speaking with you. The first question is with regards to rural demand as well as the inflation situation. How has that panned out in the second quarter so far? And how has it been any different from what you anticipated at the end of the first quarter? What are your thoughts?
We haven't seen the kind of recovery we expected in this quarter. though the monsoons barring east have been good across India. But unfortunately, we haven't seen the rural recovery as of now. But we are extremely hopeful that maybe H2 should be a better year than what is in quarter 2. So, but still, if you ask me, right now the demand seems to be weak in the rural markets.
All right. What do you think could be the concern why rural demand hasn't picked up the way you anticipated it to be? And secondly, what kind of expectations do you have in the second quarter with regards to growth in particular? I mean, would that be double digits? Are you targeting high single digits? What are your thoughts there?
So we are definitely targeting about 11 to 12% growth as far as the H2 is concerned. But as I said, the monsoon is good. Right now, I still feel that the inflation is eating up in the rural markets. It still hasn't settled. But going forward, the way we are seeing the prices are correcting, the input side prices are correcting, inflation is moderating. So we are very hopeful that market should correct in the second half.
All right. And what are you doing to, ensure that you get a majority of the share that the market, gives in terms of improvement in the second half? Because I've seen your conference call, 20% increase is what you're looking at, your distribution reach in the villages, your OTC, coverage as well. So with all these things, what can Emami grow like in this year? Yes, but more importantly, in FY24, what are your thoughts there? And what kind of margin profile are we talking about here?
So we are very confident, Mangalam, that the kind of investments we are putting in as far as our distribution is concerned, it would definitely yield results in H2 going forward, because it's a huge investments across the board, whether it is rural, also in the urban markets as well. Also at the same time, we have gone very aggressive in launching some of the premium products in our existing product basket. So that should also help in getting to double-digit growths. As far as forward is concerned, we are very confident of achieving double-digit growths in tune of about 11 to 12%, because we have done Dermicool acquisition very recently. We have invested in some startups. They should also yield results. So I am not seeing any difficulty in getting to 11 to 12% growth.
Right, 11 to 12% growth is for FY23, right?
Yeah.
And 24, would you, because by then all the assets that you have invested in will start sweating some returns. In fact, the first half of calendar 23, you will also see a bigger jump in Dermicool. How much could that be? And, FY24, would that mean about over 15% sort of growth? Is that a possibility? What are we talking about here?
So that is always our endeavor, that we should grow at about double-digit growth. We would be very happy. We have to see how the markets perform, because we are still dependent on the rural markets. If the market and seasonality is favorable, then we are very confident of about 14-15% growth. See, acquisition also has become part of our growth strategy now. You would see that we have invested quite heavily on the Dermicool brand as well as on some startups. So whether it is organic, inorganic, combined, we will see a definite 13-14% growth going forward.
How big can Dermicool be? Because, when you acquired it was over 110 odd crores. This quarter it's done about 62 odd crores. But that's on Reckitt's distribution. On Emami's distribution, how big can it be?
So, yes, from 1st of August, now Dermicool is being distributed by us. Though it is not the season for Dermicool, the season would now start from February. We are very confident that we should get to about 140 to 150 crores.
140 to 150 crores in the first year itself. And that's from the core product. You would have some product extensions in Dermicool as well?
Not immediately. We are working on some extensions right now. It will take a while. I think another 1 year we would have to wait for extensions to come in.
One thing that stood out in your second quarter numbers was the kind of new SKUs you launched. I mean, you had a couple of bridge packs for Fair and Handsome, Navratna, and sachets in Kesh King as well. Shampoos now account for 25% of Kesh King. What is your strategy there? How much of Kesh King will now come from shampoos? What is the additional revenue you think can come from there? And both for Fair and Handsome and Navratna, what kind of numbers are we talking about in terms of annual sales here?
So bridge packs have become very important because seeing the rural markets. So we launched almost bridge packs in all of our range, whether it is Boro Plus, Navratna, Pain Management, Kish King, all of those. So we expect about 7 to 8% revenues going forward coming from these bridge packs. At the same time, we have launched some bigger pack sizes for e-com and modern trade as well. And we are seeing significant contributions also coming from large packs as far as modern trade and e-com is concerned.
So are bridge packs and large packs more margin accretive? I'm trying to get to, your SKU mix, etc. And what does that do to your margins? Because as compared to the industry, you've always historically had the highest margins, closer to that 30% mark. With raw material inflation easing, with you having new SKUs, etc., higher distribution, what kind of margins are we looking at?
So, Mangalam, we have guided that our margins this year should be about 28% as far as EBITDA margins are concerned. So, see, historically, if you would see in the past, our margins have been hovering in between 26 to 30%.
Right.
Last year was one-off because of pandemic. Some of the higher margin products sales were very high. So we saw that supernatural high margins. But now that the input costs are easing, we are happy that gross margin should not be under so much of pressure. So EBITDA should be in the range of about 28%, 20.5%.
And this would mean ad spends of around 17 to 18%, right? Just the way you had guided for earlier.
Absolutely.
Right. I wanted to know a little about your D2C foray as well, because you're among the first few companies along with Marico who did make significant investments in male grooming, D2C, and now you have entered, the pet care category as well with Furball. What kind of, portfolio do you think will your D2C business be? Marico is targeted, around 450 to 500 crores coming in from these digital first brands. Do you have any target in that?
So we have investment targets. As of now, we have already invested more than 100 crores in these brands. We have invested in 4 upcoming categories. One is, of course, the male grooming. One is very premium salon range. One is pet care. And the other one is on the protein segment. So all these are, we think, going forward in the next 5-7 years, should be very, very large. Presently, the companies are being run by the existing promoters, and they are doing a wonderful job. So we are very optimistic that these companies should yield results going forward.
All right. I would have pressed you a little more on how large they can become going forward. But I mean, that's, looking too deep into the future. But for now, can you give us an update, a bookkeeping update on promoters' pledge? I mean, it's 37% right now. You had guided for it to come off significantly. When does it come off and by how much? And secondly, you'd always spoken about some non-core assets that you're looking to sell, AMRI being one of them too. What are your thoughts on both? Promoters' pledge coming down and the update on the AMRI sale?
So, see, we are, as always, I have maintained this, that our pledge percentages would come down. We are committed to bring it down to significantly low levels from now. Presently, I think it is at about 34-35%. Very soon, it should come down by about 7-8% as soon as the AMRI deals happen. We are expecting the deal to conclude maybe in the next 1.5 months. So, post that, we would see about 7-8% reduction. Then we have some land parcels. We are definitely looking at offloading some land parcels. As soon as those happen, it should come down to about 10%.
So, Amri, you're saying it will happen in 1.5 months. How much money can you raise from that?
We are expecting about 1,500 crores to come from Amri sale.
All right, 1,500 crores to come from the Amri sale and plus some land parcels. Final question then.
What the promoters would get, yeah.
That was the promoters will get, yes. And finally, the question on succession and management strategy going forward. You have incorporated a couple of your second generation, third generation, so to say, in the company right now as well. Where do you see the company going in terms of leadership going forward? Will that stay with the families or will there be some professionals coming in too?
See, Mami is by and large run by professionals on a day-to-day basis. There won't be a significant change as far as the top management is concerned. It would stay the way it is right now.
All right, take that point. Thanks a lot. Always a pleasure speaking with you, Mr. Goenka. As you speak, the The street does like the fact that over the next month and a half, we will hear something on Emery, 1,500 crores coming to the promoters, and that would mean the pledge coming down. And as a result of this, there has been a big spike in the stock, currently at the high point of trade. And importantly, business looking good as well. 11 to 12% is the revenue that they guide for in terms of growth for this year. And going forward with the investments that they're making in distribution, etc., would be anywhere between 13 to 14% So that, ladies and gentlemen, was the conversation with Imami. You take a short break, come back, get you more on the markets and individual stocks.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC!
LIC's annuity plans give annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
Ria? Ria, look at the moon. It's so beautiful.
The all-new Slavia. Skoda. Simply clever.
All right, flatlining around for the Nifty bank, whereas the midcaps are doing well. Astral is one of them, which has now moved to the high point of trade, and giving it company now is Whirlpool as well. So from the broader markets, Whirlpool is the other stock which has moved well, currently at the high point. But what's actually been the toast of today's trading session has been the auto pack. The auto index is at the high point, and it's also because sales numbers for the month of August have been trickling in. Ashok Leyland has hit a fresh 52-week high. And we have another bunch of stocks as well in focus. Sonia, take it all away.
So the three stocks I'm looking at, one is of course Bajaj Auto that reported their numbers earlier in the day. Now the numbers there are a mixed bag this time around. There's a very strong growth seen in the domestic sales, but exports are under pressure. August total sales have gone up by 8%, but export sales are down by 28% on a year-on-year basis. And the management said that the decline in exports is because of a big slide that they've seen in sales from Nigeria. Now remember, Nigeria is a big market for Bajaj Auto. They get 20% of their sales from there, and Nigeria has been restricting two-wheeler movement, and the retails over there have shrunk by 25 to 30%. The domestic sales are quite strong. In fact, Bajaj Auto is expecting an improvement in sales in the festive season from the domestic market. Let's move on to Escorts now. The stock is at a fresh 52-week high after a good set of numbers that the company reported. Total sales have gone up 7.3%. Domestic sales are up by 8% on a year-on-year basis, while export sales are up by 3.9%. Now, the management commentary was also very strong. They said that they're guiding for a better September and most likely a stretched peak selling season of 3 months. Overall, the macroeconomic factors and farmer sentiment continues to remain positive. I'm also looking out for Ashok Leyland today. That stock too has hit a fresh 52-week high after bagging a big bus order in United Arab Emirates. They've bagged an order to sell 1,400 buses, school buses in UAE, which is to the tune of $75.1 million. And that's the largest bus order that they've bagged in UAE. So the stock is reacting to that.
All right, Sonia, thanks a lot for that. With that, we're out of time on this edition of Chartbusters. Thank you so much for watching. Stay tuned. Trading Art takes all the market action ahead.